right, I'm happy to be joined with the CEO of Ayr Wellness, Jonathan Sandelman joins us. Mr. Sandelman, how are things?
Things are great. How are you, Shad?
Yeah, excellent. It's been a few months, obviously, since we connected. Lots changed, including the name. So let's begin with that. What was the whole thought behind it, changing it from Ayr Strategies to Ayr Wellness?
We're a wellness business, and we're not a strategy business, so it seemed pretty obvious to me.
Good stuff. Well, as I said,
that's the hardest question you're going to ask me.
We got more stuff than that, but yeah, that's pretty much telling it like it is, right? So want to begin with the state of Florida. I know since we last spoke, it's now been a full quarter since you've closed the acquisition of Liberty Health Sciences, which is one of the biggest vertically integrated cannabis operators within the state of Florida. So where are we with the overall acquisition? Has everything been fully consolidated with your operating model? And how does business look going into this quarter?
So I can't pre-announce quarters, you know that, Chad, and we'll be having our quarterly call later on in June. So with those typical restrictions, I could just talk to you about how the integration has gone and some of the improvements that we wanted to happen are actually starting to happen. So if you remember, the original premise was that we saw this as a great asset, a one-of-a-kind asset. We thought it was the last moment to enter the state, possibly, because we understood that there would be a land grab that would be completing, and if we weren't participating in it, we'd never expected in the future to see a cannabis store on every corner of every town.
Right.
And so there's a limited number of stores in each town that a town will allow. These guys had a good footprint, but not a complete footprint. Mm-hmm. We knew with our resources and our capital, we could accelerate the number of stores that they were planning on, which was 42 by the end of the year. We're already up to 36. We put a process in place, a team in place to be able to go faster than that, and obviously the capital behind it. So that's one. But what you understood and I understood right from the beginning, when we look at what we saw as a distressed asset, sometimes distressed assets are distressed for good reason.
Right.
And, I've noticed that over my 30 years of investing. Just because something is cheap doesn't mean it will get rich. It could get worse. But when we did the deep dive and our diligence on this company, what we did notice is, what are the drivers? What would it take to make this an outstanding business and one of the top competitors in the state? Mm-hmm. And what was clear to us as we looked carefully at this business, you can't run a business by having flower in your store 1 or 2 days a week. Because the week is actually 7 days. Mm-hmm. And patients need their medicine on any one of those 7 days. So we said to ourselves, okay, if a business plan or any intelligent business plan would have the product that sells most in the state available 7 days a week, because that's what the consumer wants, what would it take to actually do that? And are we at Ayr capable of producing that kind of outcome?
So the answer is yes, right? So what are you doing?
We didn't know. We had to look at what was causing the problem. So it wasn't like they didn't want to sell the flower. They just couldn't grow the flower. And you and I talked about that. So what would I tell you today? If you go back to August of 20, they were having testing failures of 25%. Yeah. That's unheard of.
Unheard of.
So, so you grow a flower, you send it to be tested, 25% fails. Think about the absolute cost of that. They only get to sell 75% of your product. Mm-hmm. Number two is, if you're only keeping 75%, you're not going to be able to have flower more than 1 or 2 days a week in your store. So we said, okay, let's clean up the facility and let's get that failure rate down to where we have it at Ayr. What would it take? So we did the deep dive on that. We came up with a plan to clean up the facility and reduce the crop failures. That has been done. That failure rate is right in line now of our other cultivation facilities.
Great.
Okay, so that's the good news. Two is, now that you've cleaned it up, how efficient are you in growing? How many grams per square foot? There's typical measures that people look at their business. How has that been historically versus where we are at Ayr? And the good news is, because yes, we have 300,000 square feet, but if you're getting small yields, who cares? You're never going to put weed 7 days a week in your store. So you get past the testing, now you got to be an efficient grower. So the grams per square foot are also up 60%, but nowhere near where
Can I
they
ask
are
you something? Have you
Yes.
moved some of the growers that you have in other states into Florida, or did you retain some of the staff that was growing already with Liberty Health?
Fortunately, right before we bought the company, they hired one of the best cultivators in the state of Florida, and I would argue one of the best in the United States, I talked about this previously, who happen to know and were professional colleagues with our head growers. And so I told you a long time ago.
Who was it?
Ayr is focused. This is what my edge is I think about it, refine it, refine it. We always say it's not the box, it's what's inside the box. I've said that on your show before, right? A brand is not a pretty box. A brand is about the product inside it. People want to be Apple. I don't buy the box because it's white. I buy it because it's the best phone. I don't buy Nike because I like orange. I buy Nike because I see them as the best running shoe. So what Ayr has been always committed to do, and is, I think today, I think we feel very proud about this claim. We feel we're the large scale producer of high quality flower in the United States. Now, Shad, what I'm not saying is, are there smaller, very high quality producers of great bud, great flower?
Yep.
Absolutely. But no one is trying to do it at 1 million or 2 million square feet. And Ayr is doing that because that is our edge. We've always said the consumer knows. And when it has a choice between a beautiful box or a beautiful box with great product in it, they will choose the great product over and over. So we've already gotten our yields up. We already have flower more than 2 days a week in the stores. Let's call it 5 days a week in our stores, 6 days a week. But today we're doing that with 2 strains. That's not good enough, Shad. We're not happy with that. By July, we should have flower in our store 7 days a week, 15 strains. And when we do that in July, you will see, the investment community will see, our shareholders will see why we bought this asset. Because the leverage using our skill set and the talent on the ground is tremendous in the Liberty acquisition.
Well, I will say, like, this is a company that's always had a big following. It goes back to the early days when Afria, launched this whole company, obviously within the state of Florida. You announced last month now 36 dispensaries. So what are you seeing trending within the state? Is there still exponential growth on the horizon? Because is there any kind of saturation? Because this is probably one of the most, if not the most lucrative state across the U.S. when it comes to cannabis.
So I agree. I think it's one of the most lucrative states. It's not highly competitive compared to the state of California.
Yep.
Right? We're still talking 20 million or more people here.
Yep.
Okay. We're not at adult use yet. And so you have this tremendous medical market with a call option on one day that it goes adult use. So it is very important to go back to the land grab analogy to set yourself up. And that's why I'm driving my team to go faster and faster than the original budget. Will I get there? I'm not prepared to say that today.
Okay.
Have I tried to do what I say and say what I do in the past? The track record over 30 years would say yes.
Okay.
So if your business plan is to execute on the land grab and to lock up some of the best locations in the state, so you're putting in yourself in the position, so if and when it goes adult use, you're well positioned for one of the most lucrative states in the United States. That has to be the Liberty game plan, and it has to be the Ayr game plan.
Makes sense. Branding. You've just talked about what you want to communicate. This is an industry that marketing and advertising is a little bit more challenging, but is there a strategy in play to bring to the forefront a lot of what your brands are all about going into the back end of 2021?
Yes. So my original business plan, which sometimes your business plan has to be based on reality. And the reality when I started the business, I had limited capital, right? So, Shad, I had to make a choice, a capital allocation, right? I could buy best-in-class assets in each state I was going in, okay? And I could rebrand them immediately, spending millions of dollars to do that. Or I could take that capital and continue to buy more assets. I made the choice at that time that buying more is better than rebranding the stores at that moment, because I said to myself, if I'm truly buying best-in-class assets in each state, whether I change their name immediately from their existing name to Ayr, what is the return on that capital?
Right.
How much more does that drive traffic?
Yeah.
And the conclusion that I came to at that time is buy more, leave their names. We are in the process now of putting together all of our new branding. All of our stores will be Ayr stores. There will be new designs, store designs, new logo, new messaging. We even will have, from time to time, an Ayr branded product on our shelves. It will not live there every day. It will be in around something special that we either manufacture or grow.
Okay.
And when that opportunity comes, it's like a reserve wine.
Right.
You don't make reserve wine at every harvest. You make it when the sun shines brightest.
Right.
And when we have that moment, we'll have that. Now, additionally, I think about building national brands. I think about it slightly different than my competitors.
Yep.
The way I think we have almost 500 SKUs. What I'm doing is distilling our brand portfolio down to a subset of those SKUs. Because every time we make an acquisition, we get more brands.
Right.
We're picking the best of those, wrapping those as national brands, and putting them in our stores and into the wholesale market with the best marketing messaging to reach the consumer. And I think as I build out the footprint, I'm building out a national brand because I'm talking about the same names in every state.
Big opportunity as this industry continues to grow. I want to talk about forecasting and your March outlook following your fiscal 2020 financials. You outlined a roadmap to revenues of $725 million and adjusted EBITDA of $325 million in 2022. Furthermore, 6 of the 7 states in which you operate will contribute to over $100 million in revenue apiece, which are big, big numbers. So let's learn a little bit about that roadmap and how do you feel you get to those numbers?
So we can go state by state. We're not talking about organic growth here. I think the market, from what I hear from my marketing people, it's kind, and ask them, why is our stock trading still at such a cheap multiple? And people will say, because the lift from 21 to 22 is so big. Now, several things. One is, if we were just doing that lift based on our core portfolio with organic growth, I would say pretty hard to believe.
Mm-hmm.
What the market is not giving us credit for is these states that we've added. We added 5 states. They're not going to sit dormant, Shad. They are built to produce in the second half of 21.
Okay.
So in the first half of 21, we closed our deals. We spent CapEx. That starts to pay off in the second half of 21. And by the time you see our second half, you will see us already start to annualize into those bigger numbers in 22. So the leap, while it looks big from last year to 22, it will look much smaller, much more doable from the back half of 21 going into 22. Now let's think about every state. Massachusetts,
Yep.
we never had adult use. You know that.
Yep.
Okay. So now we have adult use. So we bought this business. The medical stores used to do $100,000 a month. We improved them to $1 million a month.
Wow.
Medical stores in Mass, insanely good.
Yep.
Okay. Wholesale, when we bought Mass, was $100,000 a month. It's now 4.5 to 6 million a month, depending if we have enough supply to meet demand, right? So, but we only had medical.
Right.
Now we have the single best portfolio in our view in the state of Massachusetts. We have 3 in the Boston area. No one else does.
Right.
Okay, big lift.
Big.
In addition, we'll have completed our new addition. We call it M3, another 70,000 square feet of cultivation.
Mm-hmm.
Because the existing M1 and M2 cultivations will not be big enough to both feed the adult use stores because they're in spectacular locations and continue to grow our wholesale business. So that's the driver for Massachusetts. New Jersey, we close in the third quarter, late in the third quarter. We are building out an addition there, okay? Will come on in 22 of another 70, 90,000 square feet. So we'll have a wholesale business and more supply into our retail business. We think we have some of the best locations in the state of New Jersey. Pennsylvania, we have 2 stores open today. We will have 6 stores open at the end of the year. We are adding much more cultivation. Our flower is beautiful in the new cultivation we've already built. And later on this year, early next year, the addition that we are building will come on, I think in the second half of 22, we'll have more than double our production, okay?
Yep.
Let's go to Arizona. Arizona, we're building a 90,000 square foot cultivation facility that comes on in 22. The market there for wholesale flower is up 25%.
Yeah, it's huge.
Since they went adult use.
Yeah.
So when we bought the business, we modeled 22 to 2,500. It's 3,000 and slightly more depending on the quality of your flower. So we've modeled better now. It's modeling better. We'll see if it's sustainable. And that comes on. And, you know, as we have always said, we want to be contiguous and we want to penetrate states deeply. So in following that business model, I would think Arizona continues to be very attractive, especially when we have our own supply.
So I have to ask, because I was speaking to a company actually the other day, they said record sales, their latest 420 from last month, located at their dispensaries just outside of Las Vegas. Are you seeing that with yours as well and trending everywhere across the country from where you're placed?
So 420, you know, I'm hesitant to speak too much because we're going to report earnings. Yep. If we can just talk about a single day and nothing else about the quarter, it was very close to when, you know, people received their $1,400 check. coincidentally.
Yeah.
And so I would think the industry did extremely well.
Yeah, for sure.
That day.
Yeah. What I wanted to also ask you too, there's been a lot of companies within the space that have released their latest financials, yet I look at the stock market, it's still pretty flat. I know there's stuff that you can't control. It's pure fundamentals, but what do you think is the root cause of that right now? Like there's a lot of people just saying, can we get the safe banking passed already? In the event that does happen, do you think we finally turn the corner and all this potential we talk about actually comes to fruition?
So I can't tell you I know if and when the safe bank happens. You know, I hear other CEOs of MSOs and they talk with great conviction around timing. Chad, you know, whenever politics is involved, the outcomes to me seem like a random walk. I just don't know how you can handicap politics. But what would that mean for the industry? We've always talked about the extreme volatility in our stocks, right? On the way up, they go up 30%, they're down 30%. And it's because, in my view, the narrowness of the investment community that actually invests in this sector. So highly correlated on the way up, they all charge in, they all charge out, they all charge in, charge out. I think what the safe bank does for the industry that I'm excited about, it broadens out the investor base. So I think that dampens volatility. It also gives access to capital for the industry at much better pricing than we've seen in the past. So the cost of capital goes way down, which should really help the business's financials. We've already seen a tremendous difference in cost of capital since we did our deal earlier this year. Those bonds that you and I have talked about that we issued are trading at 110 approximately. Yep. We issued them at 100. So the cost of capital has come down, but I would expect it to come down quite a bit more.
Appreciate the update. This has been very thorough. Let's keep in touch, and congrats on all the acquisitions and hard work that your team continues to do.